Stocks edged up and the dollar slid after global equities enjoyed their best week in 9 months on expectations. The U.S. economy would dodge a recession and cooling inflation would kick off a cycle of interest rate cuts. The prospect of lower borrowing costs saw a gold price that cleared $2,500 an ounce for the first time, and the dollar dip against the euro, while the yen made a sudden lunge higher that weighed on the Nikkei. European shares opened flat following their best weekly jump in 3 months as investors prepared for another data-heavy week. Focus will be on U.S. Federal Reserve Chair Jerome Powell's speech at Jackson Hole for interest rate cut clues. Looking at our markets, all-share index up 0.9%, financials up 1.4%, industrial shares up 0.7%, and the rand is currently trading at 17.82 to the dollar, 19.67 to the euro, and 23 rand 8 cents to the pound. To help us look ahead, we are joined by Viv Govender, who is from Rand Swiss. Viv, thank you so much for your time this afternoon. I mean, how far have we come from the market turmoil of 2 weeks ago to the current picture that we're seeing on our screens over the past week and this week?
Quite a bit, actually. I mean, the turmoil we saw a few weeks ago, or 2 weeks ago, was largely driven by Japan as well as a disappointing jobs number from the US. I do think that the Japanese situation was quite temporary. Looking at just what happened there, we had the carry trade basically under threat because the Japanese yen weakened dramatically on an interest rate hike. There probably was a bit of margin calls occurring at the same time because of this, and that caused the market to basically come down significantly. But since then, we've basically been rallying strongly higher as pretty much the Japanese Bank of Japan came out and effectively said, we're not going to do this again while the market is this uncertain. And so that kind of calmed things down, and we've seen most of the losses, in fact, more than most of the losses being remade in the last 2 weeks.
What message are you getting when you look at the stock market and the bond market? Because some analysts would assume there's some kind of tension here when it comes to what the bond market and stock market is trying to tell us.
To a certain extent, I mean, the bond market has not done what the stock market had been hoping for. You look at the start of the end of last year, we would have had a rate cut by now, in fact, probably 2 by now if the bond market had been correct. The stock market, however, doesn't really care because it's been running higher, pretty much this entire year. Yes, there's been, certain factors like AI that has driven, movements higher. But I think at the moment, the market just knows, the stock market just believes that we're going to go into a rate cutting cycle that's going to last, several years. And usually those things are rather positive for stock markets, and so they're running higher. What exactly it occurs and the speed it occurs has been a bit disappointing over the last little while. But I think the expectations now, we're going to start in September and carry on from there. And I think, to a certain extent, that's probably enough to keep the stock market higher, at least in the short term.
Let's talk Absa, because early on when we got the announcement that Ari Rothenbach is going to be taking early retirement, we also got interim results. We saw the share price go up 4.9%. What do you make of these developments and these leadership changes around Absa? Because there seems to be an instability problem here, and perhaps that might help us kind of understand why Absa is not able to compete with its peers, given the fact that leadership is always changing.
Yeah, I think this is the 7th CEO in 7 years, or it's under 7 years. So it's a significant change we could be having in Absa. Look, I mean, I think to a certain extent, banking has become a lot more competitive than it was, say, a few years ago. If you look at what the South African banking system looked like 10 years ago or so, it was a pretty stable kind of situation. In fact, it's one of the reasons we got through the financial crisis a bit better than some other countries, because our banking system was just so stable and so kind of almost non-competitive. But I think over the last couple of years, you've seen the emergence of Time Bank and the Discovery, etc., coming into the system, the rise of Capitec. We've seen more innovation coming into the system around the banking sector, especially in the technology area. And to a certain extent, I think it's the system we've had in place with our banking CEOs being these conservative, people that have served their 20 or 30 years at the bank or coming from government, etc., to run these big banks. Doesn't really work in this environment. We need someone more like a tech CEO than somebody running a utility to run these banks going forward. I mean, especially in this kind of environment. Maybe when things calm down, you can go back to the whole, to just run a steady ship kind of thing. But right now, you need more innovation. That's number one. Number two, with regards to Absa, it's not just Absa. A lot of banks are extremely cheap. If you look at their dividend ratios versus their P ratios, for instance, Absa's dividend ratio is significantly higher than its P ratio. It's about 6 point something. Its P ratio. That means if you just looked at the earnings it gave, it will pay you back basically in about 6 something years. It's paying you close to 9%, just under 9%, a dividend ratio at the moment. These numbers indicate the market's extremely nervous about the banks. So even though the results were not great, today Absa is up just because the market's been pricing such negativity to the share price.
Let's talk Sasol. We've got the company releasing results tomorrow. What are you going to be paying attention to when you peruse those statements?
Obviously, what's happening with infrastructure. I mean, this infrastructure development has been a kind of an albatross around its neck. The Lake Charles development has been something very important for it. But even beyond that, I mean, looking, going forward with regards to commodity prices in the crude sector, we've seen, despite tension in the Middle East over the last couple of weeks, the crude price has been remarkably low. And I think that's due to the fact that we are seeing a lack of demand in places like China. That's obviously affecting energy demand. And even in South Africa, you see the rand is stronger as it is today. These are not good things for Sasol. Sasol means a weaker currency. Sasol prefers a higher oil price to do well. And those are the things that are occurring at the moment. Yeah, but regarding the actual company specifically, I would say what's happening in infrastructure, what's happening in development in Lake Charles, what's happening with some of its operations in Europe as well. We need to see how they're adjusting to this current new geopolitical environment that we're dealing with at the moment.
As we wrap up, what's important for you, the Jackson Hole gathering or the DNC in Chicago?
Look, the DNC is going to be a coronation. It's not going to be an actual event. I mean, I don't think they're going to have Hulk Hogan or someone similar to that turning up here. It won't be quite as entertaining as Republicans. You're probably going to have more, how can I say, more normal people talking at the DNC. But pretty much it's a foregone conclusion. Kamala Harris is going to win. Or be nominated, and it's over and done with. For Jackson Hole, yes, in the past, Jackson Hole has been very important, but I think the Fed has come out in the last few years and kind of trying to downplay Jackson Hole's importance. Yeah. They really don't want to be, held, to ransom by market expectations on this thing.
Viv, if we see Hulk Hogan at the DNC, that's going to be entertaining for both you and I. But thank you so much for your time this afternoon. That is Viv Govender from Rand Swiss giving us his perspective on the markets.